Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is your Cannabis Business Podcast. The Marijuana Business Magazine asks if vertical integration is the right approach for your cannabis business. I would say right off the bat that you can take a look at data that already exists where you can see that Washington State doesn't allow for vertical integration. There's a separation where you can be a producer and or a processor, but you can't be a retailer as well. You can have a retail license, but if you do, that's all you can have. So you can be a producer and or processor or just a retailer in Washington, but not all the way. You can't be seed to sale. And if you look at other states that have implemented vertical integration, those have a lot more investments. They have a lot more people coming in, and they're doing a lot better. Those are successful companies that have grown. They've become multi-state operators. They've had outside investment opportunities, and the growth and success of those businesses are palpable. You can see it. And so there definitely should be every state, every city, any country that tries to implement legality should be looking at vertical integrated opportunities. So Washington State's adult use businesses are forbidden to be vertically integrated, but in New Mexico, cannabis business companies are required to be vertically integrated. Other states such as Colorado and Oregon allow vertical integration, but don't mandate it. So state license types and tax laws also play a critical role in decisions to vertically integrate. Every state's different, and that creates a different risk reward for being vertically integrated versus not. The ability to leverage economies of scale in a vertically integrated business model is a clear advantage. But experts who spoke with the Marijuana Business Magazine largely agree that vertical integration isn't the model for a business to succeed. Because the customer demographics of cannabis is so broad, a diverse number of business models are potentially viable if decisions are made well. And it ends on the question, does one want to be a jack of all trades or a master of one? And I would advise that if that's not your area of expertise, then that you hire out. But you need an exit strategy. And a lot of these companies are thinking that this is going to be a legacy, and it's not. It's a commodity, and a commodity is a race to the bottom in terms of pricing. And so you need to have an exit strategy. You're building this up to get out, and that's it. You're not going to be staying in. No one will. There will be a point where there will be stupid prices in terms of valuations, and you're either going to be bought out or you're going to be ran into the ground. And that's it. We haven't even seen automation. We haven't seen banking come online. And so I would say vertically integrated is the way to go. Whether it's the right choice for you personally, I don't think that really matters. You have a fiduciary duty to your shareholders, to your stakeholders, to your investors, to do the right thing. And that's to maximize and leverage as much as you can. And so if it isn't maybe the right fit, then you need to rethink what you're doing. You need to be taking advantages of much opportunity as you can while you can. And that's grabbing as many pieces of the pie. You need to find subject matter experts and put them in place. And if that means giving them a piece of the pie, do it. There's too often I see in restaurants where they don't give the chef more respect, i.e. money or what have you. And there needs to be more profit sharing. The chef is everything. And there's a lack of respect to somebody who's just sitting at home taking that check, and maybe that's not enough money for them. When you're building a brand, that chef is your brand. That grower, for this analogy, the grower is your brand. And you need to be investing a lot into your product from the very start. And so if you're going to sell something, you should probably have access to the very beginning. So choosing the genetics and the cultivar and the way that it's grown indoor, outdoor should all be decisions made from the very beginning. And the best way to do that is be vertically integrated so that you have complete control, so that when you make that decision to exit, that you can stand by all of those decisions. Understanding all of the facets within the supply chain is important. When I was an intern at the World Trade Center, somebody came to me and wanted to make salmon jerky. So I found them a fishery in Canada, a cannery in China. We imported it through Oregon and distributed it through Costco. But ultimately, finance is the key. So getting a home equity loan, line of credit, credit card advance, everything we could do to get that in Costco was the key. So understanding how to make your idea come from just idea to fruition is a matter of understanding all of the supply chain. So here's a guide to the cannabis supply chain. There are many types of businesses that make up and support the cannabis supply chain, the best of which are positioned for exponential growth as the industry continues to expand. For people looking to invest in the industry, understanding the supply chain and how a product develops from seed to sale is a great place to start in vetting which companies are positioned for success. All cannabis touching businesses, from growers to retailers, must be licensed to carry out a specific step in the supply chain. Each state has their own licensing and enforcement systems that cannabis businesses must work with to stay compliant. There's also an entire category of business technology companies dedicated to tracking the movement of cannabis throughout a state's supply chain, known as seed to sale technology. And these systems make sure that all batches of harvested cannabis are accounted for and that it's possible to tie every finished product back to its original batch. Like all agricultural products, cannabis starts with what's essentially farming. Depending on the state, they may call it growing or cultivating. The companies in this stage of the supply chain specialize in harvesting quality cannabis, which can be done indoors or outdoors. They strive for consistent, dependable harvest schedules that often have proprietary methods of growing to enhance quality and shorten the time it takes for cannabis plants to mature. After harvest, growers will either process their flower themselves or pass on the raw material to a wholesaler who will trim, dry, and cure their plants before creating a finished product. Sometimes one company will grow their own cannabis and produce a packaged product ready for wholesale, but for the sake of overview, we'll assume that they've handed it to a different company. Before selling their harvest, each batch will be assigned an ID and sent for lab for testing, except in Washington, we don't test. Clarification, Washington does test the potency, but not for any pesticides. Each state has its own regulations around mandating testing, but it usually includes reporting on cannabinoid potency and the presence of pesticides on foreign material. As a potential investor, the first distinction you'll have to make is whether you want to invest in a plant-touching company or not. Many larger funds have restrictions that prevent them from investing in companies that produce, move, or sell cannabis products directly. There are many ancillary companies that support the industry that may be better options for investors with restrictions. Companies that support agriculture, including lighting, greenhousing, infrastructure, irrigation systems, fertilizer, testing, and seed-to-sale software. With regards to production and wholesale making the finished product, at this stage of the supply chain, dried cannabis flower is transformed into finished products. This product can look very different depending on the end product. Flower can be packaged into jars or rolled into joints ready for sale. Extraction companies can create concentrate that can be packaged and sold or turned into vaporizers, topicals, or edibles. And these companies will operate like specialized production factories. Products that have been modified from the original flower that was already tested need to be tested again. Most states require a sample of the product to be tested on behalf of the entire batch or products made from the same original harvest, and these test results are then associated with the batch in the state's seed-to-sale software. White labeling is very common in the cannabis industry. A brand will buy a finished but unbranded product from a second company and add their own branding and packaging to create the product that consumers recognize in dispensaries. Branding plays a huge role in the success of cannabis products, as it can be a primary differentiator for both retailers and consumers. Ancillary companies that support production and wholesale include packaging, branding, and creative, wholesale marketplace testing, and seed-to-sale software. Distributors in the cannabis industry come in many forms. Depending on the state and operations of the wholesale brand, distributors can be used in the following ways or a combination of them. Number one is shipping product on behalf of the wholesaler. You can warehouse product on behalf of the wholesaler, serving as an external sales team, or collecting payments from retailers and moving money on behalf of the wholesaler, or contract manufacturing of the product. The variety of distribution models in the cannabis industry can only be attributed to the fact that the industry is so new. So we predict a consolidation and simplification of these models in the coming years, likely in a way that ends up with distributors existing solely to move product between wholesale and retail. Consumers can only legally purchase cannabis from a licensed retailer. Like retailers in any industry, they strive to carry a variety of products that cater to the customer's demographics. As a cannabis retailer, finding vendors becomes a bit more complicated than any other industry because you can only purchase from licensed brands in your state. To remain compliant, retailers must check the licensing and lab testing of all of the brands they're buying. As a business-to-business marketplace of only compliant brands and retailers, companies like LeafLink allow retailers to discover new brands with confidence, knowing that they're licensed. If you're looking to invest in the cannabis industry, you should get a better idea of how products move and the limitations of operating in a highly regulated space. Understanding which part of the supply chain you want to impact and whether or not an ancillary investment is right for you. All of this will give you empowerment and be able to vet potential investments with a more informed lens. And with that, we're going to roll this one up. I'm Josh Kincaid. Don't forget to like, share, and subscribe, or don't, and I'm out.